a new line of research that we have underway at the bank that is looking at the question of aid effectiveness as it relates to trade. The context for our work at the bank has been very directly influenced, of course, and shaped by the global economic crisis, and looking beyond the crisis, looking ahead to the development priorities and objectives that the bank group is advancing on behalf of our clients. One has to be mindful of the contribution of global trade to economic development historically. The engine of global trade has been a primary driver of economic growth and poverty alleviation over the past number of decades. And investing in programs of research and analysis and the operational agenda on trade today matters even more because of the relatively fragile recovery and the need to find any way that we can to enhance global economic growth and recovery ahead. And trade is at the center of that agenda. Investment in trade by the bank includes both investment, of course, through our operational portfolio, lending and grant making in developing countries, and also a very active and vibrant research agenda on trade. The particular area that I focus on is looking at the relationship between trade transaction costs and trade facilitation. Trade facilitation is a multidimensional area. It includes everything from regulatory reform initiatives to lower trade costs and expand trade, all the way to investments in hard infrastructure, telecommunication systems, and other investments to expand trade opportunities. Relatively new research at the bank has shown that investment in aid for trade is specifically targeted at objectives of trade facilitation, trade policy, and regulatory reform promise the highest rate of return on investment relative to other areas of aid for trade, such as infrastructure and trade development. Countries like Mexico and Egypt, countries including Kenya and others that have taken on an action agenda to reform and invest in institutions related to trade reform, that again this new research at the bank appears to indicate a relatively high rate of return on investment in that type of aid for trade. The first part of the agenda going forward, I think, is anchored in a invigorated effort to build on our work in research and data collection and analysis on the question of aid effectiveness, both at the project level in country, as well as looking at the broader questions of aid effectiveness for trade on a global scale. In addition to research and data and analytical tools necessary to understand the aid effectiveness agenda, we of course want to find avenues to expand opportunities to work with our clients in innovative projects that relate to trade expansion and trade facilitation.